Do you see that as well? A little bit of risk coming off the table today despite the losses?
I think it's hard to read anything into today's market, and David said it well when he said there wasn't much happening today. And if you have a look at the volumes, they were extremely low, only $3.5 billion worth of stock traded. It's a Wednesday, so usually you do expect at least about $4.5 billion. In fact, all week we haven't seen that $4 billion mark being cracked on the Australian share market. So altogether, it just looks like a lack of activity there. Although it was encouraging to see just a fall of 0.5%. Of course, yesterday we rose on the exuberance on hopes that China will come up with a pretty big stimulus package, and the numbers doing the rounds was about 2 trillion yuan. But we've seen Xinhua come out to knock that back, saying that we're not going to see stimulus around the massive stimulus that we saw in 2008 as part of the global financial crisis, when we did see China splurging 4 trillion yuan. And China's market not reacting too badly to that, only down by 0.1%. Instead, it does look like the US market after hours having an impact. We've seen the US futures down about 0.5%, and that was after Research in Motion came out after the bell with a very surprised first quarter loss. And we saw that stock down as much as 13% after hours, and that's had a negative impact in terms of the US futures. I mean, in the morning, every single sector was trading lower, led by the materials and the energy space, but by the close we've seen two sectors in the positive, and that's the utilities as well as the telecom space. Of course, tonight's going to be important. We're going to be watching that Italian bond auction. We see the 5-year and the 10-year auctions. So that's going to be watched closely, given the concerns that we have seen around our rising longer-term yields, especially that of Spain. And next week's going to be important because we do see a Spanish bond auction.
Trade today, Julia, those retail sales numbers pretty disappointing. We did see, though, a near 1% gain last month. Do you think the market was getting a bit ahead of itself, hoping for a little bit too much?
A rise in the month of April, because remember, April was the Easter holiday as well, but it does look like shoppers on strike over that Easter long weekend. So some disappointing numbers. Expectations were for a rise of 0.2%. Instead, we saw a fall of 0.2%. If we have a look at the breakdown, once again, it does look like shoppers are willing to spend on services, things like cafes, restaurants, takeaways, but are still quite cautious in the area of household goods. But altogether, a pretty disappointing set of numbers, and really just confirming Myer's commentary last week when it came out with its profit downgrade. Myer saying that it expects full-year profit now to be down as much as 15% instead of the original 10%, and saying that conditions had deteriorated in April and May. And that's really why we were looking at these numbers, to see whether they were going to reflect those comments through from Myer. And of course, that's been important for David Jones, because it comes out with its third quarter sales numbers tomorrow, and we've seen some selling in David Jones ahead of that announcement tomorrow. So David Jones' stock down by 2.2%. Myer, a lot of it already priced in, given that profit warning that we saw last week, but unfortunately a disappointing set of numbers, just reconfirming the commentary coming through from Myer last week.
Specific news from today: Programmed Maintenance out with a strong result today. This is a company that's moved its head office over to Perth because its resources division is doing so well, and that's really what's driven this result today, isn't it?
If we have a look at those first quarter construction numbers, they tell a lot about Program Maintenance business. And if you have a look at those construction numbers, up by 5.5% quarter on quarter, really being driven by the mining states, Western Australia and and Queensland. So if we have a look at Program Maintenance, it's been benefiting from the mining capex that we're seeing. We have a look at this company. It, of course, looks at services, staff, maintenance, project management, with a lot of its revenue coming through from those miners. They are forecasting moderate growth in the current financial year. So the stock up by 3.5%, really tied into that mining boom and mining capex.
And also the Echo Crown saga. James Packer involved now. How's this one likely to play out?
Well, I guess we know that Crown has been interested in Echo Entertainment for a while there, and I guess there are synergies involved with the two. Were to look at a merger, synergies in terms of head office, in terms of sourcing VIP clients. But really, if we have a look at Packer's ambitions, it could be that it is towards Echo Entertainment and some of the New South Wales assets rather than the Queensland assets. One of the things that Echo Entertainment has is better concessions with its VIP concessions. So it could be looking to transfer some of its VIP customers to New South Wales rather than Perth, which is quite a stretch or quite a long distance to travel. But we also know that Crown may have ambitions for Barangaroo, and of course New South Wales has only one casino licence, so it could be that he's looking for a cheaper way of getting into the New South Wales market and a license for that Barangaroo casino ambitions that he does seem to have. So altogether, the spotlight back on the casinos. Not a huge reactions in terms of share price. Crown was down by about 0.5%, Echo down by about 0.2% today.